Hello, and welcome to UrbanHood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I'm your co host, Allie, and I'm here with Mushi Bhuiyan. Our mission is helping you gain financial freedom. You're listening to one of our special weekly market talks, which provides news on the upcoming week that may be important to traders. And we're super excited that you're here with us.
We are not here giving anybody any financial advice. This is just for educational purpose only. So what happened to last week? I'm sure that most of you know. We'll dive into more details soon. Last week, we have seen S&P dropped 1.2%. It's not that bad. Dow is just 1.3. However, look at EU, European market, 8% down. Why is that? So a lot of this stuff, macroeconomics, that's what I will share with you. And then hopefully that will give you an idea. And is this the end or not, you'll find out. Last Friday, that when market closed, Dow Jones was not bad weekly, about 400 points down, 445. Year to date, today it's 7.4. It's not bad. S&P, well, it's down not too much. It's at 1.7% you saw earlier. NASDAQ, weekly 380 points down. It's not that bad. Comparing what happened to Europe, we had a good last week. We know when there is a war, inflation, and the biggest thing is look at it into oil prices, they spike. See, in around 2017, 2007, when we had a recession, that time oil prices spiked around 140, around that area. But last week, it just came back up, and just we'll go a little bit more deeper. But as you can see, inflation, recession, whenever that happens, yeah, we get hit with all this energy, and especially consumer will end up paying more fees or more price on the gas and so on. And it hurts those who is filling up your tank and say, man, it just before whatever price you put it, every day you'll have to pay way more. Last week we have seen what happened. The barrel, that on oil barrel, it touched 112 and then slightly it came down. But we know that those who is following inflation and the recession number, that there is a very, very good correlation between with inflation and with oil price. One of the things the economists are projecting, if oil stays above 110 and higher, you may not see that inflation going down to 10. What Fed is thinking that they want to bring it back to 3%. Good luck. They have to figure something else out. Last week, we did talk about these commodities. I know some of you are in future traders. So I want to hear that we did talk about aluminum. Did anybody play it with aluminum or anything, any of these futures last week? What was your experience?
Not aluminum, but steel did okay.
I was tracking Volatility Index, VIX, V as Victor, I as Indiana, X as Xerox. In 2008, we had a financial crisis, and 2020, we had a pandemic crisis. During both crises, what we see, VIX went way above $75. Currently, VIX is below 30, 35 range. On 2022, when we went to lockdown, everybody stuck in the house, all-time high. Now we are facing almost like a war. And if you look at the March 20 till 21, the new president came in and the new administration, but during this time, seems like it's staying below this number, this volatility. So I want you to start thinking of knowing that why is that happening? And what could be the cause? Are we heading to another recession? What do you guys think?
I think it's the low volume traded in the market.
Yeah, I know we have a lot of smart people in the room that you guys already know that. Yeah, it's the volume. And there are other factors in the economy that we are seeing whatever is happening in Europe, Asia, America somehow able to figure out a way, still conduct the business and keep the economy healthy. If that's the case, yes, we do not have to be worried too much. Look at this economical data came out last week. Look at the job numbers on our hospitality side, construction, transportation is good number is going higher than what they projected because of Omicron is getting in control and we may have a whole economy is reopen again. If that's the case, it's a good sign for US economy. And the numbers, payroll numbers also last week and came out in for January and February number. Here you can see January number was payroll change is 481 versus 678. It's not bad. It's good in a month that are big success. You see the unemployment rate from January 4% to 3.8% went down. So it's also good. Unemployment number also good. The economy hopefully is getting better. And our earnings and all the others number they're looking at is not bad. Look at job report number. Payroll estimation was last week came in 423 versus actual payroll number was 423,000 versus 678,000. That's a huge number came up. Unemployment number estimate was 3.9 and 3.8. So it still is positive, is good number. So what that means now, as you can see that although everything is happening in Europe, the war and all this, how that affect our economy is not too much. So hence those who is thinking long term, you might need to start looking a little bit deeper, knowing some of those business that you know of that is this really at the bottom and is this a good time to start adding some position. So I would highly recommend you start considering long term. When I say long term, at least think of it from now to next 1 year, that what can happen in 9 months, a year, or 18 months. You might find some great deal with this current market. STOXX is a European market ETF. Stocks. This indication the stocks in this what it is Europe ETF market ETF. Look at what happens since February. Last 2 weeks we are facing this war with the Ukraine and Russia. Whatever happened, our market stayed very strong. 8% down last week. You see that here, boom, big drop. So when that happens, there are a lot of uncertainties may happen in Europe, and still it looks like USA is not that dependent on what's happened between that region. So we are not saying we are out of the woods, but still we should be aware of it that it's not going to be that bad. Start Europe, the market drop for this commodity market, currently what we are seeing, that when a European market is since 1970 is huge. But one other thing I want to let you know, see that since 1973-74 time, this commodity surge, it did not happen this quick so fast. So because a lot of the things, what we are seeing that Russia is in control of supplying the crude oil. It's about 20% or 28%. Somewhere I have seen that number. That's a huge number that they are in control of that crude oil.
Moshe, I'll chime in here. I think there's quite a few risks from the economic ramifications that happened right now with all the stuff in Europe.
Mm-hmm.
First of all, there's something that happened that's very unique, and they're beginning to talk about it in some circles.
Mm-hmm.
I even saw some news on the Apple Stocks app.
Mm-hmm.
So when Russia got sanctioned, basically their reserves in dollars
mm-hmm.
Were blocked that were
Mm-hmm.
international.
Right.
So now there is a fear that a lot of countries are going to start being worried about having their reserves overseas. and investing in US bonds. So I have a fear that this could shake the financial institution of the dollar. Okay. Now, I'm hoping that all these fears are just fear mongering, right? But if the dollar gets hit, and if we keep going against Russia with sanctions, and Russia starts saying, I do not want to trade 30% of the world oil supply in dollars, can you imagine what that can do to the dollar valuation?
Yeah. Well, good luck with that. You know, if you look at that, how whole dollar is in charge of in the currency of oil industry, that you have to trade with oil, then you have to look at it in history, what happened after World War. And I'm not going to get to that history lesson right now. Good luck with what Russia is doing, where yes, you are right. It's not like, they cannot do it, but that when you have a madman on the going and starting hitting his neighbors and stuff, he doesn't care what happens.
Russian Empire is going to come down.
Right.
Well, I don't trade currency, but that's what I'm afraid of.
Yeah.
I mean,
Forex,
it could hit us.
Yeah, Forex might be in there. But for now, knowing that what we are seeing in Europe market versus US market, because Europe is much more dependent on Russia, a lot of other Russia, Ukraine, and all those for their energy source and so on.
But look, we are dependent. There's a lot of stuff that we don't see. For example, Russia supplies almost all our uranium for power generation in the U.S. 20% of the U.S. power is nuclear. If Russia sanctions us and basically does not supply uranium, the bills for electricity generation in the US, we're gonna feel it like really, really bad. I mean, it's gonna affect us.
Or vice versa, if US and Europe decide to sanction Russia on the energy, we haven't done that yet because it's more impact to us than Russia.
So
what energy?
Energy is oil. You haven't sanctioned Russia for oil yet.
Yes, correct.
They can't.
Correct, Vinny.
Yeah.
What
you know why?
Sanction in there exactly that. It's a huge. If they sanction Russian oil, they're going to be crippled. But at the same time, Europe is going to get much more heat than us.
Exactly.
Well, hold on. So just before the war started, I was watching the news and they were saying they went to Qatar and all these places and said, can you boost your supply just in case we take the Russian, natural resources off the table? And they said they can't. And here's what's going to happen if they do that. We're going to shoot ourselves in the foot, because if we sanction the oil, there will still be very, very little oil that Russia will still be able to sell to other places around the world. And the price is going to skyrocket. So in other words, yes, they will sell less oil, but they will sell it at such a price that it'll be even money for them. But on the other hand, what's going to happen in Europe, which is dependent and cannot replace that supply? Europeans right now in England, I'm just reading the news, their electric bill has gone by twofold, by almost £100. Now, that's fine and dandy today, but give this 2-3 months and the average European who can't afford his electric bill or heating bill, he's going to go out on the street. Okay.
Right.
So there's a very, very major risk of to both sides, to Russia, to Europe, to us, if that happens. And I think that's why everybody's avoiding that.
Correct.
Yeah, but U.S. is in talks with Iran for their oil to
it's
replace
still not enough,
Russia.
though. Even the Iranian oil is not enough.
Not enough.
Right. But look at this.
It's true. It's not enough, the amount of it.
That's for Europe market. They're going to get much heat than us. For us, like American market is 0.08% import we are getting from there. It's not too much comparing.
That's why now drill, baby, drill.
Yep.
They're going to be drilling
Drill,
all
baby,
over.
drill. That's what they're now.
right.
White House is looking at more and more options. As you can see that what happened last week, that without going through all the politics, I please, by all means, I am not saying I'm red or I'm blue, either one. But look at that State Union speech, what Biden did. First thing he said, we are working with all the allies in Europe, and we are going to crush him. Whatever he's doing right now in Putin in Ukraine, that's not right. So White House is looking into more and more sanctions against Russia. So that not only the Putin himself getting crippled, their whole country might be going through a lot of trouble. But for us, looking at what could happen to the market, knowing that, hey, if this war gets worse, let's say Russia, this madman goes in Ukraine, and the next minute he start poking Poland and other country around there. Now we are looking into the World War III, and then there are way more details is going to happen, but they're trying to protect all of them. But let us focus on the market. What's going to happen? Those who is looking into long term or looking that, hey, what can I do from this information, what I'm sharing, the next week, what's going to happen? Next week, we do not know what's going to happen, but based on the stock, your favorite stocks, look at it a month ago, it's a month chart you're looking at, starting Microsoft, Google, Amazon, all different sectors, that it's not that bad, because some of this company, when you said Apple, a month 7% down, they're going to lose some revenue coming year, and can it go down more because they're high PE company, they still have room to go down more, and if it does, add some position. The others, look, one is a no, as position, looking at the business you care about and see, is this going to be more the defensive stock, growth stock, value stock? There are homework you have to do. I'm not telling anybody buy Tesla, buy Amazon, Google. You, based on your experience or your research, do your own due diligence. But there are plenty of good opportunities. Home Depot is 13% down, and we know the Nike is 11% down. Nike is a different issue. But think about this. But all the green thing we're doing more and more, like last weekly now, a month, a week is not bad. You are looking at more green showing than red showing. That means slowly, some of the sectors are coming back up. A month healthcare, a week healthcare. Some of them are slowly recovering it. It got beaten up enough. There is opportunity that you can see. And last week, that what happened last Friday, this is all you're looking at. Last Friday when market closed, it did not go that bad comparing what happened 2 weeks. We are in a war. Then I don't know what's going to happen this coming week. I'm not a fortune teller. However, there are so many variables in this current market. Market can go up, or it can go down, or it can be sideways. This coming week, what may happen that I don't know yet, but some of the indication that you might want to know on the Monday. I think some of the economic data going to come in, consumer credit. Tuesday, trade some balance coming. Wednesday is another job opening number. We'll see how this number it happened within a week. Is it getting better? And Thursday, consumer CPI, consumer price index. This is one of the key things on Thursday. They're looking in the market, saying, although we are facing a war and more, we see that people are ready to get back to in job market, find a new job, and then we know there is big saving. People are saved more than $2.8 trillion dollars sitting on the sideline. Is this going to come? Are they slowly start getting maintaining the same purchasing with higher inflation numbers? That's going to give us some indication this coming week on Thursday. But what's going to happen? Market might a little bit in the morning, you might see a little up and down. That's something you can keep an eye.
Thank you, Mushi. Very nice.
Thank you, Mushi. This time you did really well with the timing.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at UrbanHood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.